Strong indications of an impending interest rate cut in the United States lead our global report today, as Federal Reserve Chairman Jerome Powell's congressional testimony pushes markets higher around the world. Let's first take a listen to what he told the House Financial Services Committee on Wednesday.
It appears that uncertainties around trade tensions and concerns about the strength of the global economy continue to weigh on the U.S. economic outlook.
Fed watchers took that expression of concern as a clear and long-anticipated signal in Fed speak that the U.S. Central Bank will cut interest rates when the Board of Governors meets later this month. U.S. stock markets rose on reports of Powell's testimony, with the S&P index breaking 500 index breaking 3,000 during its delivery before falling back. In other markets, gold jumped by as much as $15 an ounce in London, while in the oil sector, both Brent and WTI rose by 3% in early trading on Wednesday. We are now fortunate to be joined for a deep dive into this market-moving development and its meaning for the global economy by Peter Schiff, CEO of Euro-Pacific Capital, and Richard Wolff, Professor Emeritus of Economics at the University of Massachusetts Amherst. First, let's just get each of your takes on the news. Why did this happen? What does it mean moving forward? Peter Schiff, we'll start with you. You've had a lot to say on interest rates.
Well, I think the main reason the Fed is cutting rates is to try to keep the air from coming out of the stock market bubble. You know, the other reason is they're trying to keep this so-called expansion going. They're going to fail. I think we're headed for recession regardless of what the Fed does with rates. The only thing the Fed's going to succeed in doing is reviving inflation. The Fed claims inflation is too low, and they want to make sure that the rate goes up. Well, that's going to be their only success, but unfortunately, that's also going to be their biggest failure.
And Professor Wolff, what's your take on how this happened and the near effect of a near certain cut in U.S. interest rates?
Well, I think Peter Schiff is quite right. I think that this is not going to have a basic impact on what's coming. Our capitalist economic system has a downturn every 4 to 7 years. That means we're overdue from the last bottom around 2008 and 9, very overdue. And I think the reason the interest rate was cut was to try, a desperate try, by the by the Trump administration to postpone this recession so it does not undercut his chances for re-election in 2020. It's an attempt to keep on kind of artificial life support the stock market and enough of the economy boosted by cheap interest rates so that the crash will be postponed. But the tragedy is, the more you postpone it, the greater the risk that it will be serious.
And what, Richard, if you could just go into that, what makes it, by putting it off, how does that make the eventual recession worse?
Well, there's a number of things that have happened over the last several years. By historical standards, the interest rates are already low. They're not as low as they were, but still lower than they have been. You've boosted the economy, you've pumped up the money supply in record amounts. That's waiting to create a real series of problems. The reason they started raising the rates this last year was to try to cope with those problems before they hit. To reverse course now means that you're letting that overhang build up, and therefore the risk that that money could stop playing in the stock market and go into the regular economy, producing this inflation, but a big and bad one, that becomes more dangerous the longer you wait, and becomes even more dangerous if you now cut the rates.
Very interesting. And Peter, you asked on Twitter today, are any House Democrats smart enough to ask Chairman Powell if he agrees with President Trump that the current U.S. economy is the strongest in history? Now, why would they have been smart to ask that question, in your view, and did they?
Well, I didn't hear the question asked. I mean, it's certainly a good political opportunity because it seems like the whole hearing is basically Democrats and Republicans trying to score points by getting Powell to either endorse or reject policies of the Democrats or policies of the president. But the easiest way to get Trump would be to put Powell on the spot and ask him if he agrees with the president, who tweets every day that we have the strongest economy in history, which isn't even close to being true. But clearly, Powell doesn't believe that the economy is the strongest in history, because if he did, he'd be raising rates, not cutting them.
Right. That was another point you made. Like, if this is the best economy ever, why do you need to cut the rates? Doesn't seem to make much sense.
Well, it's not.
Yeah.
Look, this isn't even a good economy. It's a bubble. Powell doesn't seem to understand that. He thinks the economy is doing okay. It's not. The economy today is in worse shape than it was before it collapsed in 2008. The Fed inflated a much bigger bubble this time than it did last time. And yes, the longer we succeed in kicking the can down the road, the greater the imbalances grow as a result of this bubble, and the more painful it is when the air comes out. And that's what's going to happen. And what's going to be so much worse about the coming recession is that it's going to be inflationary. We're going to have stagflation, except it's going to be recession, not just stagnation. And the inflation rate is going to be far higher than it was the last time we had stagflation, which was in the 1970s.
Yeah, some very interesting points of agreement developing between the two of you. Professor Wolf, back to you. The U.S. president has been transgressing the protocols and norms surrounding the previously sacrosanct ideal of independence for the Fed, for better or worse. Let's just listen to one recent example of that barrage of criticism.
He should have never raised the rates to the level that he raised them.
Well, he said he's not going to get pushed around by political. He said, you know, he basically suggested yesterday, I'm not going to get pushed around.
He's trying to prove how tough he is, because he's not going to get pushed around.
Yeah.
He's a guy, nobody ever heard of him before, and now I made him, and he wants to show how tough he is. Okay, let him show how tough he is. He's not doing a good job.
Now, Chairman Powell said today, when asked directly, that by law he serves a fixed 4-year term, and he said he will not resign if President Trump attempts to fire him. But President Trump seems to have gotten the policy outcome he wants, even if Mr. Powell is still there. Did Mr. Powell show how tough he is today, or did he show weakness?
I think he showed basically weakness. I think, yes, he says something. He says about independence. Everybody says that. But the bottom line is, when the president tried to jawbone him and insult him into cutting rates, it didn't work. When the president then went on a tear against China and all the other interferences in global markets that this administration has undertaken, causing uncertainty and the pulling back of investments and all of that, he actually brought the world economy into a worse situation in order to use that to get Mr. Powell to lower rates, or at least to give him the excuse. It's a stunning example, not so much of interference in the Fed. All presidents do a little more or less of that. What is stunning is the degree to which the Republicans and Mr. Trump will challenge, undermine, threaten the whole world economy to get their little way in this next election, which for them is make or break. That's the extraordinary theater that's unfolding in front of us.
And Peter, same question essentially. What is the state of Federal Reserve independence after today, and does it matter?
Well, I think it's always been a pretense. At least it was created to be independent, but it's actually acted as an arm of government. And, you know, to the extent that we can no longer maintain that pretense, that is a very dangerous position to be in. You know, but I agree with Trump that the Fed is doing a bad job, but because they didn't keep raising rates. Rates are still much too low. The Fed needs to raise interest rates. The Fed needs to allow this expansion to come to an end, because it's unhealthy. It's a bubble. The Fed has to let the stock market go down, let the real estate market go down, let the bond market go down, and force the U.S. government to cut spending. That's what needs to happen. But by keeping interest rates artificially low, they support increased government spending. They support these asset bubbles that are undermining the real economy and that are laying the foundation for the next economic crisis, which will be much worse than the last one, and for which there will be no bailouts.
And Peter, I have to ask you about this, because the issue of the gold standard came up today with a critical question from a member of Congress for Mr. Powell about reputed Fed board candidate Judy Shelton's pro-gold standard or gold standard curious position. Mr. Powell seemed to agree with a lot of the members' argument and critique of the gold standard position, even as he distanced himself from any personal critique of Ms. Shelton. What do you make of this question surfacing now and the chairman's response?
Yeah, well, of course, the chairman's response is typical. If we were on a gold standard, he'd be out of a job. But, of course, the U.S. economy fared much better under a gold standard. We had a much stronger economy with a much more rapid rising living standard than what we've had with the Federal Reserve micromanaging the economy. So we should go back to the gold standard. And, you know, the reason that the world left the gold standard, maybe Mr. Chairman Powell doesn't understand this, the world was on the gold standard. We took them off, because we brought the world onto the dollar standard. We convinced the world to hold dollars instead of gold, but because the dollar was not only backed by gold, but redeemable in gold. We defaulted on that promise in 1971. We took the world off the gold standard, but this coming dollar collapse is going to bring the world back onto the gold standard, because when they reject the dollar, they will embrace gold, and gold will once again serve as the primary reserve asset for currencies around the world.
Great. And Professor Wolff, just quickly, there was another point for economists here. Alexandria Ocasio-Cortez in the hearing talked about the Phillips curve, which basically expresses the assumption that below a certain level, any decrease in unemployment will correlate to a direct increase in inflation. And Mr. Powell remarkably seemed to agree with her critique. So quickly, what's going on there when we see this convergence between left and right on the Phillips curve?
Well, we now know that there are many other variables beside what the level of interest is and so forth, or the level of unemployment and prices. So that a line that draws a connection between the two ignores all the other factors. I think what Alexandria Ocasio-Cortez was getting at, though, was a much more profound critique. Peter Schiff is right. The problems of the American economy are very deep. The inequality that exists here, that has to be addressed. That's not even being dealt with. It's as if we tweak an interest rate, we can solve the accumulated problems. That's nutty. All that does is postpone them, and that's only to get Mr. Trump reelected, which would be a disaster also economically, given what he's done. That's the serious problem that should be addressed.
Yeah, especially when you realize that all of the problems that we have, the serious structural problems, are the result of the Fed keeping interest rates too low. And so lowering them again doesn't solve the problem. It just makes all the underlying problems worse.
Fascinating discussion. Richard Wolff and Peter Schiff, thank you both for your time.